Are you interested in learning more about the EPS through both visual and explanatory examples? Well then, you're at the right place. Welcome to Investinality, your go-to resource to weather all market conditions. Today, I'll be walking you through the EPS ratio in 4 simple steps. I'll start off by going through the definition of the EPS ratio. I'll move on to some examples of the EPS ratio. Then I'll walk you through a balance sheet example. And lastly, we'll consider some of the limitations the EPS ratio has. Now, please take note, I am not a financial advisor. Investing is risky and I am not liable for any direct or indirect results due to your investment decisions. Now, let's begin. Let's start off with the definition of the EPS ratio. Now, EPS stands for earnings per share. It is a standardized metric of a company's profitability. It is also useful as an investment analysis comparison made of a company's growth on a quarter-per-quarter basis or a year-to-year basis. Next up, let's walk through the calculation of the EPS ratio. EPS is equivalent to net income divided by the number of outstanding shares. Now, net income is also equivalent to a company's total revenue minus its total expenses. So in order to calculate the EPS, we need 3 values. The first value is the revenue or the money made. The second value are the expenses or the money lost. And the third value is the number of outstanding shares available to be traded in the open market. Now, let's walk through an example with a company called Tesla. Tesla is an automotive company. Please note, I did not choose Tesla for any specific reason. And nothing I say is a recommendation to buy, sell, or hold Tesla. I am just walking through an example to clarify the EPS. Now let's take a look at Tesla's balance sheet. Now let's look at how to find a company's balance sheet in order to calculate the EPS value. So since we're working with Tesla, I'll go Tesla, Investor Relations, and this should lead me to the Tesla Investor Relations page, which includes its balance sheet. So we go Tesla Investor Relations. All right, once we're at this page, we can see that the quarterly disclosure is at the bottom. Here we have the 2023 Q1 through Q4. We also have 2024 Q1. It's the most recent one, so I'll go through that. Go here, SEC filing, the 10Q, and this opens up the Tesla 10Q page. Here we have that the report is for the quarter ending in March 31st, 2024 for Tesla Inc. Right, you can see their main office, which is 1 Tesla Road, Austin, Texas, and the zip code on the right. But what we're looking for is the EPS. So let's scroll down a bit to right here, right? So the EPS, we know we need the revenues and the costs. And we have the actual EPS value, which is known as the net income per share of common stock attributable to common stockholders. We have a basic EPS of 0.37 and a diluted EPS of 0.34. Right, so this is for the year 2024, and it's common for companies to include previous year's data as well. So this would be the EPS from 2023. But let's focus on the 2024 one. To start off, let's consider the revenue. So Tesla's revenue is composed of automotive sales, automotive regulatory credits, and automotive leasing. That's its automotive revenues. So adding those 3 leads to a sum of $17,378 millions of dollars. As we can see at the very top, this data is in millions of dollars. Now, once we have that value, we also need to add the energy generation and storage, as well as services and others. So our total revenue is going to be $21,301 millions of dollars. Now that we have the revenue, we should also look at the cost of these revenues. So as you can tell, there's automotive sales again, but rather than being the revenue, it's going to be the cost of the revenue. So rather than being $16,460 million in automotive sales, those sales cost $13,897 million. Right, so the total automotive cost of revenues is going to be $14,166 million. And we add on to that the energy generation and storage costs and services and other costs. So the total cost of revenues is going to be $17,605 million. So here we can see that it was the total revenues, 21,301, subtracted by the total cost of the revenues, which is 17,605, and that leaves us with the gross profit of $3,696 million. But there's more to be incorporated. Here we have the operating expenses. So these expenses included research and development, selling, general and administrative, and the total operating expenses were $2,525 million. So since these are expenses, we subtract that from the gross profit value. The gross profit value being 3696, we subtract 2525 from it, and we are left with the income of $1,171 million. However, Tesla also gained money from interest income and lost money from interest expense alongside other income. So here, the income from operations was $1,171 million. So the interest income is 350. We add that. Then the interest expense, we subtract that. Since it's in parentheses, that means that it's a negative value. So we subtract that. And lastly, the other income expense net was 108. It's not in parentheses, so it's a positive value. We would add that. So 1,171 plus 350 minus 76 plus 108 is equivalent to $1,553 million. Right? So that's the income before tax. Then after tax, which is going to be $409 million, we have a net income of $1,144 million. The last deduction that is made is the net income attributable to non-controlling interest and redeemable non-controlling interest in subsidiaries. This is removed and is $15 million. Our net income attributable to common stockholders, which is our value of interest, is $1,129 million. Now, remember, we need two values. So we need the net income on top, but we also need the number of shares on the bottom. How do we determine the number of shares? Well, we have a value here that's weighted average shares used in computing net income per share of common stock. We have the basic weighted average shares, which is 3,186. We also have the diluted weighted average shares, which is 3,484. So dividing 1,129 by the basic should give us our net income per share, the basic one. Dividing 1,129 by the diluted weighted average shares should give us our diluted net income per share. However, this is not the case because net income of 1,129 divided by 3,186 actually turns out to be 0.35 rather than 0.37. And the same net income divided by the diluted value of the weighted average shares, which is 3,484, is equivalent to 0.324. Neither of these values are here. Now, why are these values not leading to the correct EPS value? Well, we are missing some numbers which are lower down on the balance sheet. Let's take a quick look. If we go a little farther down, we can see the values that are being used. So when we scroll down, we go right here. Right here. So we can see net income per share of common stock attributable to common stockholders. The following table presents the reconciliation of net income attributable to common stockholders to net income used in computing basic and diluted net income per share of common stock in millions. These are the values we're going to use. So if you remember, we have the net income attributable to common stockholders, which is the 1,129, but we subtract the buyout of non-controlling interest. So since it's minus this buyout and the buyout is negative, we're actually adding this value. So it would be 1,129 plus 42, which leaves us with a net income of $1,171 million. That's our net income value. On the same note, we have the average number of shares. So for the basic calculation, we have 3,186. And in order to get the diluted version, we have to add stock-based awards, convertible senior notes, and warrants. This leaves us with a total of 3,484. Now when we do the calculation of the net income and we divide the new net income value of 1,171 divided by the weighted average of shares, we get 0.367. And in order to get the diluted EPS, we divide 1,171, which is the net income, by 3,484, equivalent to 0.336, which is rounded to 0.34. And that is how you get these two values for the 0.34 for the diluted and 0.37 for the basic. Now let's look at this comparison between two different companies to get a sense of how the EPS can be assessed over time. We have a theoretical company A and company B. Company A has an earnings per share which has been gradually increasing. B also has an earnings per share, however, it has become more flat. If company A and company B are similar, it may make it more enticing to invest in company A, given that company A has a faster earnings per share increase, showing faster growth. However, there are some limitations that should be taken into consideration before coming to this conclusion. Some of the limitations I have are the EPS value is an estimate A company is in control of its earning values and may choose to misrepresent the actual numbers it makes. Also, if you notice, a lot of the values are in millions of dollars. So if one of the values is listed as 1 million, whereas it was actually 992,000, then that number is technically off. So that is also something that should be taken into consideration. There is the concept of EPS ratio manipulation. A company is in control of how many shares it allows to be traded in the open market. On the one hand, if a company has a fixed EPS and decides to increase the number of outstanding shares, it would thus decrease its EPS ratio. On the other hand, if a company decreases the number of shares, it would be able to increase its EPS ratio. Next up is the limited comparability that the EPS ratio has. For example, comparing an automotive stock to a grocery stock may not be as helpful as if we compare two automotive stocks to one another. Not only that, the company's price or even average volume could be other things the EPS does not fully encompass. And there you have it. Thanks for joining me here at Investinality, your go-to resource to weather all market conditions. If you're interested in more videos, make sure to subscribe, drop a like, and comment with other investment terminology you'd like me to go over. I'll take a look and consider it for my future videos. Happy investing, and until next time.